Hi, I'm Jimmy. In this video, we're looking at PayPal stock, ticker symbol PYPL. So this was a highly requested video. A lot has been happening with PayPal coming out of our most recent videos. So in this video, we're going to look at the basics of PayPal's business. We're going to jump into some recent developments that have happened. We're going to then try to come up with a fair value for PayPal stock using discounted free cash flow, and then ultimately try to make a decision because PayPal happens to be in my personal bullpen. I have a bullpen, a list of stocks that, I'd like to buy when they get to a certain price. If you'd like to see a video on my bullpen, please let me know in the comments below. But PayPal's in my bullpen. So my real question in doing this research is, do we want to buy it here? Should I kick it out of the bullpen or should I somehow just let it sit there for a while? That being said, one of the reasons that PayPal stock is so highly requested is they are way down over the past year. The stock market in general has done okay over the past year, but we could see that PayPal stock has clearly trended lower from September of last year till now, has trended lower. In fact, they're down about 30% from this time last year. Okay, now let's jump into the basics of PayPal's business. So PayPal has a bunch of well-recognized brands that they control. For example, they own Venmo. They have Zoom. Is that how you pronounce that? Xoom? I'm pretty sure it's pronounced Zoom, but it's not the Zoom we're thinking of. It's not like the web conferences. Zoom, there, PayPal Zoom, allows you to send money overseas, again, using the PayPal service. Because what PayPal does is if somebody were to own a website or they were set up a retail store, well, they allow customers to check out. They also process transactions. They do a lot of processing. They also allow customers to set up digital wallets, things along those lines. And then they also more recently have been pushing their providing credit business, which is kind of like buy now, pay later. So a customer might get a Venmo credit card or a PayPal line of credit where, they buy the product and they have to make monthly installments to pay off that product, whatever it is. We're going to come back to the numbers in a second. But for now, let's jump into some recent developments for this company. So as far as recent developments go, I actually think it's important to point something out. So PayPal has acquired a whole bunch of different companies. In fact, looking at this list of brands, Venmo, they acquired Venmo back in 2013. Payday down here, it's a company coming out of Japan. Well, they acquired that back in 2021. When we look at a company like Honey, they acquired Honey I think they closed the deal in 2020. They announced it at the end of 2019. They closed it in 2020. This is important because when we jump forward to probably the biggest news coming out of PayPal that just happened a couple of weeks ago, and that was the announcement of the hiring of their new CEO. So the new CEO, his name is Alex Chriss. He comes out of Intuit. Now, I bring that up in the context of PayPal acquiring their way through growth, because Alex Chriss was actually one of the leaders over at Intuit. And for those of you who don't remember, well, Intuit actually bought MailChimp back in 2021, I believe it was, and they paid $12 billion for it. He was one of the guys that led that acquisition. So there's absolutely no reason to believe that Alex Chriss isn't going to continue to, let's say, acquire the competition of PayPal to help spur growth and perhaps send them in new strategic directions. So my real question when it comes to Alex Chriss is, what is he planning to do regarding the recent announcements about the direction of their business? So back in February of 2023, they announced that they were laying off about, 2,000 full-time workers. It was supposed to save like $650 million. And ultimately, they're going to try to control their costs, improve their margins, and try to, correctly align themselves for growth. And I've been waiting for Alex Chriss to come out and announce what his plan is. And there's no reason to believe that he's going to deviate too far from that plan. But I would have preferred that I see something. So if you happen to see something that he says that deviates in any real way from that original plan, please let us know in the comments below. But beyond that, I like this hire for the CEO of PayPal. I think he's got the pedigree for the position. I think he will likely do fairly well. And I think it's I think that the company's well positioned given his background and his skill set. That being said, let's jump into another piece of news that came out earlier in the year before the Alex Chris hiring was announced. So back in June of this year, PayPal announced that they had come to terms with KKR, which is it's a global investment company. Basically, they run a whole bunch of different funds. They have some like insurance parts of their business. They have some hedge funds. They have some real estate funds. They're a global asset manager and they have multiple billions of dollars. Well, ultimately, they agreed that they were going to sell their receivables to KKR. So previously, I had mentioned that one of PayPal's business is basically offering credit lines. Well, those credit lines become receivables for the company because PayPal lays out the money and then they expect to collect on those loans. The dangerous part to that is what if the person doesn't pay us back? If I'm PayPal, if they don't pay us back, well, then we lose that money. So many times what companies will do is something like this, where they will go out and sell the receivables. So KKR gives them money now. I think they gave a few $1 billion up front, and then they agreed to terms, especially over in Europe, that they would basically manage that stuff going forward. So it'll be more of like a credit line going forward. Now, PayPal still has to manage the upfront, they're still going to collect the payments from the person and all that stuff. But in the back end, the loan itself, the money gets moved over to KKR. That's how they make their money out of it. But this isn't the first time that PayPal's actually done this. PayPal did this back in, I believe it was 2017. I think it was November of 2017 that they did this. So this is the press release from PayPal's website going back to November 2017. And here we can see that they essentially did the exact same thing, but back then they did it with Synchrony Bank. Again, they sort of set up these agreements for multiple billions of dollars, and clearly it worked out because they're doing it again now with KKR. So overall, I like this move. I like the deal. I think it's a typical thing for this type of business to do. So I think it's smart for them to do it. As long as they're going to be in the credit business, they might as well lay off or be able to at least capitalize on some of that money sooner than later, which is essentially what they're doing by getting the money from KKR or Synchrony Bank. Either way, let's jump into some of the numbers. Okay, so when we jump over to the revenue chart, well, clearly we can see revenue has grown nicely, and analysts, those are the green bars, analysts are expecting for revenue to continue to climb. But the picture isn't quite as rosy when we jump over to net income. Net income is the same thing as profit. And yes, analysts are expecting for the numbers to be better over the next couple of years, but we can see back in 2022, there was a big pullback in net income. Now, there's a few different reasons for that, but the primary reason was an increase in transaction expenses. Transaction expenses, as far as PayPal, how they define it, is basically the cost of running transactions. So a customer jumps in and pays for something, let's say they pay Visa a certain fee, or the bank that process the bank that that the customer's running it through. There's a fee tied to that. There's a fee for, they got to set up the e-wallets and things like that. All of those fees. Well, those fees went up in 2022, hence the decrease in net income. That's one of the reasons. There was a few others, a few one-time charges, things like that. But this is one of the big ones. That also speaks to, when we go back to what the company did, it also speaks to the fact that as to why they would lay off some employees, why they would try to improve their operational margins, to improve their operations, and hopefully try to improve their net income margins in general. Laying off some of the receivables over to KKR is right along those same lines. Clearly, when we look at the green bars, well, we can see that analysts are expecting for profit to rebound in 2023. And year to date, so far, they've already improved compared to what they were doing at the same time last year. So growth is a little bit harder to come now than it was, let's say, a decade ago for PayPal. But I would think that under Alex Chris, they're going to be able to gradually ramp it up. That being said, let's jump over to the weighted average shares. So this is the average shares outstanding for the company going back to 2013. The most important part here is that clearly the numbers are trending lower. And this is a good sign. This happens because the company is doing stock buybacks. the lower the number, the better. Now, right now, if we were to look at the most recent numbers for these shares outstanding, well, they have, I think it's 1.12 billion shares outstanding right now. So it's actually lower here. By the way, these weighted average numbers, if you're curious, you can get them from their annual reports. They publish them usually on the first page or two of most annual reports. But it's great to see that, okay, they are in fact buying back stock. In fact, when they cut the deal with KKR, they came out and said some of the money, some of the receivables money that KKR is going to give them up front, they're going to do some stock buybacks. So that should do a decent job of helping the stock price hopefully find a floor at least. Okay, now let's jump over to free cash flow. So this is a chart for PayPal's free cash flow going back again to 2012, but we also added 3 years of analyst estimates. This is good because when we have analyst estimates, we can use those analyst estimates to try to come up with the fair value for the stock using discounted free cash flow. So when we jump over to the discounted free cash flow calculator, we can see that right now we're getting a fair value of about $99 per share for PayPal stock. And given that the stock is trading in the low 60s, the stock looks like a really good buy right now. Now, just so everybody understands how all this works, these numbers down here, these are the free cash flow estimates that we saw on the previous slide. The previous chart, these are those estimates. Well, what happens after we take these numbers? So we take the numbers that analysts are giving us. By the way, this number here is how many analysts are recommending, like an average of 12 analysts, 9 analysts for each year, if you're curious. If you have one analyst, less reliable than 12. 12 is a decent number for number of analysts. Well, the way this works is we take analyst estimates, and then after that, from there on out, after the final year, so in this case, after 2025 is complete, we assume that the free cash flow is going to grow by our perpetual growth rate. In this case, we're using a perpetual growth rate of 2.5%. That's fairly conservative. So we're assuming the free cash flow goes, 5.4 billion, 6.5, 7.6, and then it grows at 2.5% from there. Again, that's probably fairly conservative. Now, I'm not too concerned about that because even with that being, even with our numbers being conservative, the stock still looks fairly undervalued. Now, for me, on a personal basis, whenever I've done a thorough analysis of a company and it's a company I'm considering buying, I also like to add a margin of safety based on the risk of that company. So I've analyzed PayPal, and I think a reasonable amount of risk to use, given their current situation, is about 20%. So with 20%, our fair value now drops to, if we add a 20% margin of safety to it, fair value now drops to $79 per share. Again, the stock's trading in the low 60s. The stock looks quite good. So the real question is, do I want to buy this stock for my own personal portfolio? Now, I actually own Citigroup in my portfolio, and it was a half position when I took it. Citigroup's run into some headwinds. I did a video on all of that. And I wanted some exposure to the financial industry. I don't have much exposure there. So I took a half position in Citigroup. What I think I'm going to do is I like PayPal's potential long term. I think that growth has slowed. I think they've got to improve their margins. And I think that does the new CEO do a good job of ramping it up? I think it's very possible. So what I'm going to do with PayPal on a personal basis is I'm going to buy a half position. And in my mind, I'm sort of pairing it off with my Citigroup position. Now, if you're curious to see my entire portfolio, I recently did a video on my investment portfolio and what all the pieces are and where I bought them and all of that stuff. I'll leave a link to that in the description below. But I think that PayPal would be a nice complement to my Citigroup holding because they're both sort of in the financial sector. And I think PayPal, right now, they've got a strong enough brand that I want to be a part of this. And at this price, it just looks too appealing for me, for my portfolio. So for me, buying a half position. So if you're curious about what my portfolio looks like, I will leave a link to it in the description below. There's a link right here. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.